Welcome to the Explainer. Today, we're tearing into LegalZoom's Q1 2026 financials, unpacking their big strategic pivot and figuring out what it all means for their future. LegalZoom is obviously a household name, America's #1 online legal services company, but this quarter is a completely fascinating case study. We're watching a legacy tech brand try to navigate a landscape that's just being turned upside down by artificial intelligence and some seriously intense competition. We're going to look at the hard numbers, the strategic bets the executive team is making, and the very real headwinds they're facing right now.
Here is how we're breaking it all down today. First, a Q1 2026 earnings snapshot. Second, the subscription growth engine. Third, AI and human expertise. Fourth, market headwinds and competition. And finally, their full year 2026 outlook. All right, let's jump right in.
Part 1, Q1 2026 earnings snapshot. LegalZoom definitely turned some heads on Wall Street this quarter by beating expectations right at the top line. We're talking about a really robust 13% year-over-year revenue growth, hitting nearly $207 million. That actually came in ahead of what analysts were modeling. And alongside that top-line beat, they delivered a very solid $36.5 million in adjusted EBITDA. That represents an 18% margin. So right out of the gate, the financial foundation here is looking incredibly sturdy. But to really understand where this money is coming from, we have to look at the revenue split. The old school view of LegalZoom is probably that it's just a place you visit once to file some LLC paperwork, right? Well, the numbers tell a completely different story now. Subscription revenue is the absolute heavy lifter here, bringing in over $130 million and growing nicely at 12% from last year. Transaction revenue is quite a bit smaller at $76.6 million, though it did still see a very respectable 15% bump. What this tells us is that LegalZoom is successfully evolving into a recurring revenue platform. They're moving way beyond just that initial one-time business formation transaction.
That brings us to part 2, the subscription growth engine.
Now, you might naturally expect that exploding user numbers are what's driving all that subscription revenue, but actually, subscription units were totally flat at 1.92 million compared to the exact same quarter last year. The overall pool of subscribers literally didn't grow. And, in the consumer internet and software space, flat user growth can sometimes be a massive red flag. It kind of suggests that newer marketing initiatives might just not be moving the needle on user acquisition the way management hoped. So if the user base isn't growing, where's the growth coming from? It's powered entirely by average revenue per user, or ARPU, which is sitting at $263. That's a 4.4% increase year over year. What this reveals is that while they aren't adding a massive influx of net new subscribers, the users they do have are paying more. LegalZoom is doing a fantastic job of moving customers into higher value compliance packages and premium tiers. They're extracting more value from their existing base, which really speaks volumes about the quality and the stickiness of their upgraded product mix.
Let's shift gears to part 3, AI and human expertise.
CEO Jeff Stibble made a fascinating point about their strategy that I think hits the nail on the head. He essentially said that in an AI-driven world, they win by getting customers to the finish line, combining technology with real human expertise to complete the last mile. He's making a very clear, very deliberate bet here. While competitors are frantically racing to offer fully automated, bottom-dollar AI legal documents, LegalZoom is saying, hold on. When real risk is on the line, whether that's business compliance, estate planning, or intellectual property, entrepreneurs want the speed of AI, absolutely, but they want it paired with the accountability of actual licensed professionals. This human-in-the-loop strategy isn't just a marketing slogan. It creates a sticky, incredibly hard-to-replicate footprint. It builds a differentiated ecosystem that combines AI, experts, and scaled service operations across all 50 states. That is a serious economic moat. They have a vast independent attorney network and their own proprietary law firm. It completely elevates them beyond just basic filing forms and creates a barrier to entry that a scrappy little software startup would find incredibly difficult and wildly expensive to try and replicate nationwide.
Which leads us to part 4, market headwinds and competition.
Because, look, no business operates in a vacuum, right? We have to objectively weigh the whole picture. On one hand, LegalZoom has incredible brand leadership, double-digit revenue growth, and rising revenue per user. But they are simultaneously fighting off aggressive rivals who are heavily undercutting them on price. And that dynamic is exactly what is leading to those flat user numbers we talked about a minute ago. Competitors frequently compete purely on upfront price and speed. LegalZoom is choosing to differentiate on the breadth of their services and their post-formation support, rather than getting dragged into a race to the bottom. It's a smart strategic choice, for sure, but it definitely creates conversion pressure in the highly price-sensitive segments of the small business market. And all that intense competition, plus the massive push to transform their platform, it is absolutely squeezing their GAAP profitability. They boast incredibly healthy gross margins at 64%, which is great. But once you factor in operating expenses, taxes, and stock-based compensation, their net income margin drops all the way down to just 1% for the quarter. To put that into perspective, that translates to a GAAP net income of just $1.1 million. They're literally having to invest heavily in marketing and AI integration just to maintain their category leadership, and that elevated spend is seriously compressing their near-term profitability.
Let's wrap things up with Part 5, Full Year 2026 Outlook. Despite those near-term margin pressures, management is actually highly optimistic. They've even raised their full-year revenue outlook to between $810 and $830 million. They also expect to maintain an adjusted EBITDA between $190 and $200 million. For the upcoming Q2, they're guiding for up to $207 million in revenue, which factors in a bit of seasonal drop-off in annual report filings. So why are they so confident? Well, they expect their higher-value growth initiatives and partner channels to really hit their stride in the back half of 2026. Plus, they anticipate realizing some actual tangible cost efficiencies from all those internal AI implementations. So I want to leave you with a final question to chew on. As AI completely reshapes the legal landscape, will LegalZoom's premium human-in-the-loop approach be enough to consistently win against a rising tide of low-cost competitors? The numbers prove they are extracting more value from their current customers, absolutely. But the ultimate test is whether this hybrid strategy can reignite actual subscriber growth in the quarters to come. It's going to be a fascinating dynamic to watch play out. Thanks for joining me on this explainer, and definitely keep digging into the data.